And so, of course, to begin, I do want to acknowledge, celebrate, and pay my respects to the Ngunnawal and Ngambri people of the Canberra region, where myself and Nick and people are joining from, and of course to all First Nations Australians on whose lands other people are joining us from. The cultures of which are among the oldest continuing cultures in human history, with incredible knowledge for issues that are absolutely fundamentally important for planetary health equity, the issues that we're concerned about here today. So lovely to see you, join with you today for the final webinar in the Planetary Health Equity Hothouse Saving the World webinar series. I'm Sharon Friel. I head up the hothouse, and I'm joined with Dr. Nick Frank, who's one of the Laureate Research Fellows. And so really what we thought we would do, as many of you know who have been joining us over the course of the series, we are really paying attention to some of these big structural issues that are contributing to climate change, to inequality, and ultimately to human health and well-being. And at the core of that are these systems of policies, of institutions, of commercial activities, of norms that absolutely incentivize, reward, bake in the excessive production and consumption of fossil fuel based goods and services, which of course are horrific for the environment. They're also really bad for human health, and they're very unequally distributed and valued, and so contributing towards inequities. And we call that all of that the consumptogenic system. And what we really focus on within the hothouse is research about trying to not just understand that consumptogenic system, but trying to understand how to exit from it, how to reform the system in ways that are good for people and the planet ultimately, and in a very equitable way. So what we really wanted to do today is, as we've got to the end of the year, really just to share some of the highlights. I don't know if that's the right word, Nick, but the highlights of the research that we've been doing over the course of the year, and then think about going forward, where we've got lots of ideas, and we've got a marvelous new colleague who's online with us today. I can see Dr. Desh Gadgeril, who's the other Laureate Research Fellow, joining us. And so we've got this powerhouse of political economists in governance, really thinking about planetary health equity. So we'll tell you a little bit about what we're thinking of into the future. So what we have been focusing on, so we're going to do it in a slightly conversational style, but making sure we've got plenty of time for discussion with yourselves, the audience, So please, as you think of things, we're going to break our flow to make sure that we come to you, the audience. But what we have been focusing this year is very much on that political economy question of planetary health equity, with a real focus on finance, investment by both public and private actors. Because of course money matters, how that money gets used really matters, the size of the allocation really matters. And so there's real opportunities of understanding finance and investment, real opportunities for course correction, reorienting changing it completely to be in service of people and the planet. So one of the pieces of work that I was leading, but with colleagues, was around financialisation. And so there's been this development certainly within public health, the development of the field called the commercial determinants of health. And that's been about historically understanding the role of big tobacco or big food or gambling, alcohol, fossil fuel industries, and what the practices and the products from these industries, what they mean for human health, and then also particularly climate change. Not just climate change, of course, but that's what we focus on when we're talking about planetary aspects. But what we wanted to do, and what the evidence tells us, is sort of behind these industries, if you like, or behind the corporations, there are a whole suite of other actors and decisions that are getting made that relate to finance. And so we really just wanted to sort of unpack finance, financialisation, and how that might affect planetary health equity. And what we found, this was based on the international published literature and some of the theoretical perspectives coming out from political economy and political science more broadly. What we found were three core pathways that matter. So speculation on the stock market, for example, that can really contribute to volatility in commodity prices. So when we think about what happens in food price spikes or energy price spikes, some of that is being caused by this speculation of kind of the future possibilities, the future prices, the future future returns to be had from these commodities. And that's incredibly problematic when these hikes happen, and the volatility, which also relates then ultimately to availability and affordability. That really matters for access to health promoting goods and services like nutritious food, like affordable energy, and ideally affordable renewable energy. So speculation on the markets, which is where massive profits, of course, get made, runs some risks. The second pathway is to do with how financialisation and basically the shareholder desires and primacy really shape corporate behaviour, both in terms of what they focus on and in terms of the financial rewards that then potentially create economic inequality. If you think about the financial returns and the financial incentives that are given to the executives compared to some of the other workers within a company, for example, and that we know very clearly contributes to economic inequalities. Economic inequality is really bad for health. It's really bad for our mental health, and it increases our cardiovascular disease risk as well because of that, the relative inequities that gets experienced. And then the third way that financialisation affects planetary health equity is through the financialisation of everyday life. So what do I mean by that? So if you think about all the mortgage products, all of the access to consumer credit and debt, superannuation schemes, insurance policies, and we use some companies, you can buy that from Qantas, for example. So it just becomes completely normalized in our everyday lives. And if you can afford it, you can manage that. If you can't, that's problematic. If you have the social capital to navigate all of that. You can manage that, and if you don't, you can't. And what that does is creates this inequitable anxiety, alienation, as any Marxists on the call will be very familiar with, but also a marvellous colleague in public health, Friel, has really been starting to unpack alienation and what that means for health equity. But then, of course, access to money by some, through credit and debt and super, allows people to afford particular homes, for example. And as some of the work that Nick has done has shown, here in Australia, that's really problematic because we've got some of the largest homes in the world with all of that embodied emissions. So it's not good for the environment as well. So we've been trying to unpack financialisation just through these three pathways. There, of course, is much more detailed than that. There's a publication in the Lancet if you're interested, with a way of saying, okay, well, how might that be done better if that continues to happen? And so really it's about trying to understand how to pull back some of the power, some of the ideational power and some of the material power of these institutional investors and also some of these corporations. So transparency, checks and balances need to be built in. That's a regulatory question. It means that civil society groups have to continue to shine a light on these practices, to monitor, to hold to account. And the sorts of research that many of us on the call are interested in, not just shining a light and unpacking these problems, but really digging deep into understanding what are the pathways forward. And that's what we're going to be doing in the coming years. What are the pathways forward in a world that is completely financialized? So Nick, this is, you've also been thinking about money, you've been researching around investments, and you've been particularly looking at the public sector and the sorts of investments that are happening in energy, because of course the energy system is vital for planetary health equity. So is it looking good?
Thanks, Sharon. I'll give you the unsatisfactory economist answer, which is it depends. So yeah, as you say, to avoid the worst effects of anthropogenic climate change, we need significant investments in renewables. The International Energy Agency, the IEA, estimates that we are going to need $5 trillion in annual energy investment to be net zero by 2050. And we are well off that. We're probably about $3 to $3.5 trillion away from meeting that required level of investment. And so public finance is going to have to play an incredibly important role in financing the transition. And there are really two aspects to public finance that I think are important. One is that this is money that is fundamentally controlled by the state, and so is responsive to, in theory, to politics, to people, to activism. So is a kind of an area where change is possible and rapid change is possible. And so, particularly in democracies, people can advocate for their governments to spend public money on renewable energy investment, and to stop spending money on fossil fuel investment. The second thing that's interesting about public finance is that it's catalytic. So it can help to channel private sector investment into the areas that we need. States probably don't have the financial firepower on their own to meet that multi-trillion-dollar annual investment that we're going to need, but they can help to direct private investment into those sectors to meet that funding gap. In terms of what we've seen in energy investments, our work is really focused on, this year is really focused on export credit agencies, which for the non-trade nerds out there are this kind of unique class of public financial institution that sits at the intersection of trade and investment. They fundamentally were set up to promote national exports, but they've been heavily involved in energy infrastructure. And we've got a couple of working papers up on the website if you're interested in checking out some of that work. And we've recently started to do some work around the role of national development banks. So financial institutions that are set up to promote either national development or international development. In terms of what export credit agencies have been doing, I mean, for the last 20 years, they've invested heavily in fossil fuels. So between 2013 and 2022, they provided, in the order of 200 billion in fossil fuel financing. Canada, China, Japan, and South Korea alone have spent in excess of $50 billion on fossil fuel financing. And that might seem negative, and it is, but we're also seeing some change occurring. So the investment, the portfolios of ECAs and development banks have shifted in the last couple of years. So from roughly 2016 onwards, the growth rate of renewables has outpaced that of fossil fuels for ECAs. And for development banks, they're increasingly getting out of fossil fuel investment. They've been a bit more progressive relative to ECAs in terms of their financing for renewables. So they're ahead of the ECAs in terms of financing, but the ECAs are important because they have more financial firepower than development banks. Export credit agencies are the single largest source of bilateral public finance. I mean, there are a couple of problems associated with the current pattern of lending. One is that, somewhat surprisingly, a lot of this investment has been directed to high-income and upper-middle-income economies. So economies where arguably the need is not the greatest, because these are economies that do have access to capital. I mean, the real need is in lower middle-income and low-income economies, and they have largely been excluded from these financial flows, particularly flows from export credit agencies. And, I'd sometimes get accused of being a bit too negative, so I'm going to try talk about some of the positive things that we're seeing. One is that export credit agencies are waking up to the fact that they can no longer finance fossil fuels. So, for example, Export Finance Australia this year announced that it would no longer support overseas fossil fuel projects, which is a really positive development. Whether or not they continue to support domestic fossil fuel projects, that's a separate question, but it's still a move in the right direction. And because investments from both export credit agencies and development banks are really dominated by a handful of countries, China, the US, Germany, South Korea, Japan, and France, it means that shifting the investment priorities in these countries will have global ramifications for the energy transition. We're not trying to coordinate 185 countries. We're really trying to coordinate no more than 20 economies. So that to me is quite hopeful, because it's not like the global climate negotiations where collective action is really, really difficult. And I think there are a number of measures that governments and their associated financial institutions can take to accelerate the clean energy transition. One would be just stopping fossil fuel investments. A number of countries have already agreed to do this and are in the process of it. Some countries have held out. I'm looking at China, South Korea, Japan. They're still investing very heavily in fossil fuels. Getting those economies out of fossil fuel investments would go a long way towards avoiding carbon lock-in, particularly in low and middle income developing countries. And expanding policies that increase support for clean energy, I think, is really important. So, for example, many clean energy firms are small to medium-sized enterprises, and these types of firms lack the resources to pursue export credit applications, which are really technical. They require financial professionals. And so comparatively simple fixes, like fixing application processes and aggressively promoting the benefits of export finance for clean energy, including through subnational government programs, programs at the state or the provincial level could further expand the number of clean energy firms that are interested and capable of pursuing export deals. And we can encourage our respective export credit agencies to take equity positions in clean energy. They've been doing this for things like natural gas for a while. For example, Japan's ECA has taken a direct equity position in natural gas companies. There's nothing stopping our ECAs from doing exactly the same thing, but for renewables. And our data shows that development banks have traditionally been very comfortable with insuring against various forms of risk for the development of fossil fuel infrastructure. And again, we can do the same thing for renewables. Rather than the US Exim Bank de-risking ExxonMobil's LNG activities in Mozambique, it could substantially de-risk private sector investment in solar investments in sub-Saharan Africa or Southeast Asia or Latin America. So in terms of what we're going to look at next year, I think one of the important things is the conditions for change. So we kind of understand the problem, we understand the evolution of investment. We don't yet fully understand what drives change in these institutions. So that will certainly be a topic for work. And the other big public actor in all of this are sovereign wealth funds. Again, there are a handful of sovereign wealth funds out there that have the potential to channel trillions of dollars in investment. And we really don't understand what they're investing in, how that investment has changed, and what would it take to shift their investment further towards renewables.
Great, Nick, and I think we're going to come to the audience now, are we, to see if anybody, just we'll take one or two questions, and I would just say, I mean, it's just been remarkable seeing those findings, with this public money, and the real risk to both continuing, as you say, with climate change and exacerbating global inequities, which is, I find remarkable, which, as a health person, all of that comes together to exacerbate global health inequities as well. So these things are so interconnected and such opportunities to actually have incredible benefits if, like you say, if done well, in inverted commas. So, colleagues, if anybody's got a question or a comment just of the remarks that we've just made around sort of, both the finance and I think the investment part is begs so many questions, and then we'll carry on. We've got a few more things that we want to talk about. So Bronwyn, I see your hand is up. Do you want to come off mute? Lovely to see you.
Thank you. Thanks very much for this dialogue. And I'd like to ask a question about scale. I just feel like so often the positive projects that could be the opportunities you're highlighting will start at a scale so small that the sort of capital you're talking about, I mean, even if we look at something much, much lower scale, like social enterprise finance support within Australia, often the projects that they support to scale up so much before they can access that capital. So how do you even begin to think about bridging the scale challenge when you're trying to redirect capital in the way that you're suggesting?
You got an answer for that, Nick?
Yeah, it's
$1 million question.
Yeah, I mean, I wish I had a clean answer for it, but I don't. I mean, one of the issues with energy investment in general is that it's incredibly capital intensive and it's risky. So there's economic risk associated with it, there's political risk associated with it. And everything that we can do to eliminate that risk, I think, will encourage market participants. So there's often a complaint from export credit agencies and from development banks that there's simply not enough bankable projects. And to your point, they're just not large, right? But there are a variety of things I think that could be done to increase the universe of bankable projects. One would be, making sure there's sufficient seed money available to scale in the first place, running pilot projects, making these financial organizations willing to take on more risk. For export credit agencies, they tend to operate fundamentally in the commercial part of the market. Which is not their intended purpose. They're supposed to be operating in the sub-commercial part of the market, the risky part of the market. So ensuring that they actually do what they're set up to do, I think would be important. So those are just kind of some ideas off the top of my head.
And the scale question was something that Libby had asked as well. Libby, I've seen another question for you, Impact. A lot of talk about developing investee capacity and investor financial tools for scaling up and better managing risk. But the kinds of things that provide market returns are another issue. Yeah, so true.
Yeah. And to that point, I mean, export credit agencies are not necessarily set up to tackle problems on the lend or on the recipient side, but development banks are. So seeing more projects that link development banks with export credit agencies and then potentially involve some kind of blended finance with the private sector might go some way towards addressing that capacity gap while simultaneously allowing small and medium-sized enterprises to tap into that pool of capital.
Desh, did you have a question, comment?
Yes, I did have a quick question, Nick. So with these export credit agencies, these are probably some of the lesser known institutions, organizations to the public. So, there's this theory of quiet politics that there's a lot of happenings behind closed doors, especially with these kinds of agencies. So is there anything that you've explored around the quiet politics behind these agencies and how that might have shaped their actions?
Not yet. I mean, it's a great setup question. I swear we didn't plan that in advance, but I know that our colleagues Christian Downey and Maxfield Peterson have been doing some work around those kinds of questions, and I would agree with you completely. They are this really kind of nebulous agency. I mean, I've been involved in trade for more than a decade, and I hadn't really engaged with ECAs at all. So even for trade wonks, they're not particularly well understood, let alone the general public. And I think that a lot of their investment decision making is, if not dominated, certainly influenced by quiet politics. So, for example, in the case of the US Exim Bank, the US government agreed to stop fossil fuel financing, but it's developed. US Exim has continued to do so. And that's because it is afraid of fossil fuel interests and the political backlash that could be generated through curtailing fossil fuel investments. Fundamentally, they don't want to get sued. They don't want to kick up a big fuss, etc. But there's definitely a lot more work to be done around A, the quiet politics, and then B, how you make those politics noisy.
Well, listen, we should probably keep moving, will we, Nick?
Yep. So, I guess all this talk about quiet politics leads quite nicely into questions about our upcoming election, our upcoming Australian election in 2025, and as well as COP, which has been fraught with both international and domestic politics. So For you, Sharon, what are the political and policy issues that we really need to think about going forward?
Yeah, and well, as I sort of said at the beginning, this is something that we're really going to be engaging with over the coming year. But so maybe shall we start with COP? I can't imagine any of us on this call were particularly enthralled at all with what happened in Azerbaijan. But you're really, I think what that COP, what the Baku really sort of showed us was, it, as if we didn't already know, but really showed us the influence of these industries, the ongoing influence of oil and gas interests. And people really commenting on how, global governance, the global governance related to climate change. We heard the same around the COVID, global health governance, but that it's not working, it's not fit for purpose. So, as people who are really interested in study governance, we know that it's not static, and we know that those voices, the power of different voices can change. It has changed. And then I'll just sort of reflect on, as a health, or as somebody concerned about global health, national health, health, not in this COP, but in the last COP, the health, we had a health day at COP. And we've been saying for years, health needs to be on the agenda in the climate negotiations, and there it was. And Australia played a really important role in that. The Assistant Minister for Health, Jed Carney, went to that COP where she launched the Australian Health and Climate Change Strategy. That was a really important moment for us in Australia, and I'll come to that in a wee second, but internationally. So I take a bit of hope out of the fact that different interests can come in without being completely naive to the fact that the oil and gas interests still control the agenda. But there's all of the, the manoeuvring that's going on about, hosting, can we host COP here in Australia, not the next one, but the next one. And so I think for us in Australia, for those of us online, that we're really concerned about climate change, inequality, health, one or all of the above, we must be proactively engaging with the Australian politicians, the Australian staffers, the Australian ministries of climate change, of health, all of them, to really say this is such an important opportunity to course correct the global governance of climate change negotiations, and that if we were to host or co-host with countries across the Pacific, it would send a really important signal. And if we did exactly what you were saying, Nick, with the ECAs and just stop investing in fossil fuels, then wouldn't that be a marvelous announcement or to have at that particular COP? So I think we just must move on from COP that just happened. It was a disaster. It has widened the inequities, and it's we see the kind of the entrenchment of those fossil fuel interests. But now this is the strategic manoeuvring that needs to happen going forward. Without global negotiations, it's just a bun fight. It's even more of a bun fight. So I think I've seen the power of WHO playing such an important convening role, setting of global agendas. We've seen that with COP, we've seen that with UNFCCC. It matters. It might not be perfect, but it matters. But in Australia, we can't wait. We can't wait for that level of governance to get its act together. In Australia, we've got the National Health and Climate Strategy. We've got the Climate Change Authority, who's responsible for the national determined contributions, are Australia's climate change adaptation and mitigation strategies, and feeding up into the UNFCCC. That agency is open for discussions about all the sorts of things that we're speaking about today. That's an important forum to bring in these sorts of concerns. We must, for the sort of the planetary health equity folk, we must help our health ministers and our Department of Health people to be advocating for, to show the sort of the leadership and the stewardship across government, to say, like, the decisions that get made in energy, the decisions that get made in economics, the decisions that get made in food, the decisions that get made in social policy, these all matter. They're so far away, perhaps, from what we might think from a health perspective, but they all matter for planetary health equity. And so we've all got the opportunity to, across these government portfolios, we cannot just be about healthcare and health systems. It's got to be across all of these different policy portfolios. And so for that to happen, it means for civil society, for researchers, saying that we've got to help generate the demand for, help give that mandate to our politicians and folks in government, to hear and to understand that the decisions that get made in all of these different portfolios have incredible opportunities and incredible consequences for planetary health equity. And we've got a moment, I think, in Australia. There is the movement around a wellbeing economy. At the moment, it's measuring what matters. It's a bit of a measuring framework, but that's a nose in the tent potentially for thinking about Australia's economic approach in a way that's not, as Catherine, the marvellous Catherine Trebek speaks about, an economy in service of people and the planet, rather than the economy being the end in and of itself. So we've got a moment in Australia to capitalise on some of that movement. Imagine if the Australian government was to sign up to the WeGo, the Wellbeing Economy Governments partnerships. That would really help. So look, for us, for us in the hothouse, we're researching these sorts of questions. What is it about the framing of issues or the discourse? Desh who's joined us, really interested in the ideational and institutional interactions and what the opportunities are for discourse coming in and helping to shift institutional arrangements and vice versa. So look, everything to be examined next year. We've got, I've been sort of speaking about this idea of a jigsaw of radicalism, where it might be that it's holding the line. And we've got to keep a climate and health strategy. We've got to keep well, actually, no, I was going to say we've got to keep doing what we're doing in energy and climate policy. We don't. We actually have to do much, much, much better. But so holding on to some of the things that are really good across different policy areas, that gives us a nose in the tent, and then really unpacking what are the conditions that enable really progressive policy, commerce and civil society action. We need, like you were saying, we need really noisy politics, and that also demands really noisy civil society to push up in that way. So with the election coming up now, of course, is when everybody is creating their campaign and their policy platforms. If all of us on this call were going to speak to your local politician and every single political party saying the sorts of, these sorts of issues have to be front and center of their policy platform, that would be a very, very good thing. But without that, of course, it'll just be business as usual. So, Nick, anything else you see coming up in the Australian context that you think we should be paying attention to in the hothouse, or for colleagues online? Where do you think? And then, of course, it's about coalitions of folks in these issues. It's not any one person or any one organisation. It's together we can push for this. But maybe over to you, Nick, and then we'll open up to the audience for the remainder of the time.
Yeah, I mean, just at the international level, I mean, we're seeing the old international order shifting. We've had 30 years of neoliberal inspired globalization, economic integration, free movement of capital, trade flows, etc. And that is shifting. The China shock, the global financial crisis, COVID, domestic discontent with the shape of globalization, particularly in high-income economies, the rise of populism. This will all alter, the world in which we're playing in, and may open up new possibilities for change. And I think it's important to ensure that change is kind of headed in the right direction. The rise of right-wing populism, I think, demonstrates what happens when political discontent is channeled in a way that is not necessarily good for people or the planet. But by the same token, the fact that change is occurring, I think, is a positive sign, because it means that we have an opportunity to do something different.
Yeah, it's so true. And that's happened in the past. That's where these kind of ruptures take place at multiple levels, if you like. And like you say, it's what comes in to fill that space really matters. And that's been positive in the past when there's been really kind of organized social movements that have said, this is a progressive agenda, this is perhaps a way forward. And then, of course, when that hasn't happened, or there's been organized movement in a very, either very populist or fascist way, that's been incredibly devastating in the past. So lots of opportunities, both kind of within bureaucracies, within civil society, and then those shifts that are also taking place in the markets.